we're putting a spotlight on a company that joined the Neo Exchange, listed on the Neo Exchange recently. A company is tokens.com, and I have the pleasure to welcome their founder and CEO, Andrew Kiguel, here on this spotlight discussion. Andrew, welcome.
Thank you very much, Joss. Good to be here.
Andrew, one good way that I always think is the way to start one of the spotlights or start a spotlight is to talk a bit about the basics of the organization. There's a lot of people who know you, who know the organization, who know what you're doing, but there's also a lot of people out there that may still be a bit confused about what is exactly the value proposition, what is exactly the business model, what exactly is tokens.com about, and let's maybe start with that. Could you give us a bit of an overview of what the company does and what its business model is?
Yeah, so there's a lot to get across. I'll try to be succinct, but essentially what tokens.com is a transaction processing company for blockchain technologies. And so let me explain how that works is that different blockchains that are out there, like Ethereum, for example, which a lot of people are familiar with, don't have a central authority. There's no bank that processes the transactions. Instead, it's the different users and owners of that Ethereum network that either mine to process transactions or stake to process transactions. And we're a staking company. So we're essentially making sure that when transactions are being conducted on the Ethereum network, that they're following the rules and that they're being processed and validated and added to the blockchain. So that's really what we are. We're almost like a PayPal in that, again, we're processing transactions between different groups.
And could you give a quick example of the types of transactions that you are today enabling and processing so that people can tie that a little bit back to concrete examples of what those transactions are?
Yeah, so we're validating the transactions that go into a block. So we're not actually processing like, know your client and anti-money laundering between what it is. We're just making sure that the movement and the algorithms of the blockchain are followed. And so the types of transactions that we're doing actually go back to the areas that we believe strongly in as trillion-dollar markets, being decentralized finance or DeFi for short. And so when somebody is building a decentralized finance application, which is really the borrowing, lending, or trading in a peer-to-peer fashion without a bank, they build those on top of platforms like Ethereum. They're processed through platforms like Ethereum. And Ethereum, many people don't know, is a programmable piece of software that functions on a blockchain. So when people are trading, borrowing, lending, and there's billions of dollars of this done every day, there's, I think, close to $100 billion locked in DeFi, and those transactions are being processed, for example, on the Ethereum network, they have to pay fees. The Ethereum network then needs to validate the transactions that are happening, and they require staking companies like tokens.com, and then they pay us fees, and they pay us fees in, for example, Ethereum and their native token. So we would be getting paid Ethereum to continue to validate and make secure the Ethereum network.
Yeah. So you've been using two words which I think are very important in the way that you confirm or validate those transactions. That is the words proof of work and proof of stake. And could you tell us a little bit more about what the difference is between those two models? You are a proof of stake organization. What's the difference between those two models, and what does the difference mean exactly, and what are the consequences?
I'm going to explain it a little bit through a story, if that's okay. So I was a co-founder and the CEO of one of the largest Bitcoin mining companies back in 2017. Still has about a $500 million market cap. And in 2017, when I started doing the work in blockchain, it was the traditional crypto mining model that validated transactions and kept the networks secure. And that model was developed 12 years ago in 2008 through the Bitcoin algorithm. And it's evolved. It's become this huge, industrial scale business, which is crypto mining. And crypto mining involves hardware and electricity to solve cryptology puzzles in order to validate networks. 3 years ago, when I was running in that, creating a company in that space, I had blank stares all the time when I tried to explain what crypto mining is. Today, everybody understands what crypto mining is, and there are, probably 2 or 3 dozen public companies in the space. It consumes a lot of electricity, and I don't want to necessarily dive into how much electricity, and it's good electricity or bad electricity. I think in a capitalistic society, somebody should be able to create a business and use electricity as they want. However, indisputable, it uses a lot of electricity and a lot of hardware. However, what I discovered last year at the beginning of the year is that there is a more modern system that was developed called staking, where the exact same end result is achieved as a miner, except it is done without using any electricity or near zero electricity. In fact, the statistic is 99.95% less electricity to accomplish the same work as a miner. And it is done through the staking process, which involves ownership. And I call that's a little bit like owning voting shares in a company. The company comes forward and says, we want to approve these transactions, and the more votes you have, you qualify the transactions. If it's a bad transaction, you don't allow it to go through, and we get paid for that. So we're doing the same work as a miner, but we use nearly zero electricity. We get paid the same as a miner, and I think we have a lot of additional upside that miners don't have through this ownership voting mechanism that we use.
So that's a quite important difference, I would say, between those two models. And I'm just thinking about the recent discussions around Bitcoin. I'm sure many people here on the call also read and heard some of the comments of Elon Musk when first he supports Bitcoin to acquire cars, and then steps back because of the energy and electricity consumption that it causes. So this is really about the innovation economy and tying to that a big element of sustainability and doing what is right for the environment.
Yeah, there's actually another very compelling reason why staking is going to really, I think, take over the way cryptocurrency transactions are validated. And this has more to do, the whole staking process and DeFi and the non-fungible token or NFT space, it requires a high amount of transaction processing. And I think I mentioned before that current crypto mining technology was developed in 2008, and it can process about 15 transactions a second, 1.5.
Yeah.
There's other layers and things that can be done there, but generally the crypto mining protocols are considered to be quite slow. Proof of stake protocols, not only does it consume 99.9% less electricity, it can process 100,000 transactions per second. So why is this important to DeFi and NFT platforms is these are fast growing segments of the economy. DeFi being, decentralized financial applications that people can do together. You can't run those systems on 15 transactions per second. At 100,000 transactions per second, you're at 4 or 5 times the speed of Visa or MasterCard. And this is one of the things you hear a lot about is the Ethereum gas fees being very high and the transactions being slow. Ethereum, which is the second largest cryptocurrency, is migrating its entire platform to proof of stake, not just because of the energy savings, but because they have to lower their fees and to maintain their dominant position as the key programming language of the blockchain.
Yeah, and the world we're looking at is a world, to your earlier point, where transaction flows are growing in numbers, and you need to be able to process them. If you just look at the world, and I'm very realistic about that, the world that we are operating, which is the exchange world, we're going to see DeFi emerging in this world also. There's no doubts in my mind about that. But you're talking about transaction volumes that are enormous, and I think it's going to be critical that the technologies and the DeFi technologies support that to enable those kinds of businesses. The other question I wanted to ask you, and coming back a bit to your business model, and I think you mentioned you being paid for the transactions that you validate, but what are the various components of how your organization is generating revenue and is gonna give returns to your shareholders? Because I think there's more than just the transactions themselves.
Yeah, and so as I said, we get paid for validating these transactions from the networks we support. Right now, we support Ethereum 2.0, which is the transitioning. We support a very exciting network called Polkadot, whose native token is called DOT. It was created by the same people that created Ethereum with some improvements. We support the BNB Binance token, which is very big in Asia, and another token from the Oasis Foundation called Rose, which is backed by some of the biggest venture capital firms in Silicon Valley. So those are the ones that we are currently supporting, and we're excited about the prospects for all of them because they're all programmable. And so that is one way we support those networks. They pay us, and they pay us very well in their native tokens. And one of the things that we have found is the simple payment form that we're getting would be in and around the 13% range. But for example, when we started staking Ethereum at $1,000 and we're being paid in ETH, ETH went all the way up to $4,500. And so we're still getting paid the same amount. So in Q1, which we released a couple of weeks ago, our actual return on our CapEx on the tools we use to stake was 58%. Because the tokens that we're being given and paid are being given to us at higher and higher values, but at the same amount. The other piece that's interesting for us and separates us a little bit from the crypto miners is that form of compensation that we're getting, that I just referred to, is the same as the crypto miners. When they're minting new Bitcoin, you get paid in Bitcoin, and as the price of Bitcoin goes up, they're the recipients of that appreciation. Where we differ is, and this was one of the things that I used to hate when I was running a big public crypto mining company, is every quarter I had to show the depreciation on the hardware and the expense of the electricity. Okay, and those are big numbers. This equipment has about a 4-year life on it. Within tokens.com, our equipment is the actual token. So we get the revenue that the token is generating, which in case of Q1 was 58%. But then the Ethereum that we were using for our work appreciated, and our assets that we were using appreciated by 151%.
Yep.
So it's a little bit of an extra bonus. We have the revenue and growth of a very fast growing technology company. And then we have this added upside that you might get from owning an ETF or a fund. This combines it and you get the plus side of both. And it's that second aspect that we provide that crypto miners can't compete with. So not only are we processing, kind of where the puck is going in cryptocurrencies, which is sort of the growth, but we're also providing exposure to all of these exciting areas that I think crypto miners can't do because they're functioning on old technology.
Yeah. That's interesting, and we'll come back a little bit to the concept of investors in your company and why they should invest and why now and so on. But before I do that, see a couple of questions that came in the meantime. One of the questions, refers to Bitcoin, but I think it really zooms in on proof of work and asking the question: Is proof of work more decentralized, and does it come with a higher security than does staking?
Right.
What is your view on that?
My view is that proof of stake is newer, but I actually think it's more decentralized. And that's because ownership resides amongst more people in different parts of the world. I think what we saw recently with proof of work is, with the government declarations out of China, 50% or so of the hash rate for Bitcoin resides in China. And if you look at the mining pools, the top two are run by Chinese companies that control something like 50 or 60% of the hash rate. And so, those are approximate numbers and I don't keep track of them every day. But if you look at the concentration of hash rate in the proof of work Bitcoin's ecosystem, it's improving, but I certainly wouldn't say that it is. I think Bitcoin has more security because of the longevity and the size of the hash rate. But for the protocols that have been using proof of stake, like, Polkadot, it's got a $40 billion market cap. There haven't been any security breaches. Ethereum has done a lot of work here to migrate to staking, and there haven't been any issues there as either. So my view is that the proof of stake is equally decentralized to proof of work. But let's just put that aside for a second and say, even if there was some mix there, you're still dealing with something that consumes far less energy, and all of the things that are being created in the DeFi space can't function on proof of work. It just doesn't have the capacity to do so. Like I said the analogy before, it's like trying to drink through a pinhole. It doesn't have the capacity.
Yeah. Another question that came in, and I'm gonna try to cover a few of those here. What is the benefit of staking to a company like yourself, and I guess trying to translate the question a little bit, and being an investor in your company versus doing it yourself?
Yeah, good question. So back in 2017, when I created the Bitcoin mining company, it wasn't because I was passionate about hardware and Bitcoin mining. It was to create a product for people to get exposure to Bitcoin. Today, public company investors who want exposure to Bitcoin can buy the fund or the ETF. However, and staking, miners are not using proprietary technology, and neither are we. Here's what we do for you. There are thousands of tokens out there. We do the homework. We talk to Silicon Valley venture capital firms every week, and we see where's the puck going, what are the exciting things that are happening. We do the due diligence for you. We do the custody, we do the security, and you can take this, you can buy it and put it into your RSP or your TFSA. If you wanted to do this yourself, you certainly could. There's, thousands of different coins that you'll have to research. You'll have to figure out how to buy certain things, how to secure them. It's complicated. We remove that burden for you. I can tell you one of our largest investors is I think the largest technology fund mutual fund in Canada. And the reason why they buy us is they're not permitted to go out and buy things like Polkadot by themselves. They have to invest in public companies. They want exposure to Polkadot because they see the huge growth potential there. They invest in us because we hold and stake Polkadot. That gives them that exposure that they want as part of a public company. So to answer the question, yes, you could go and do this yourself. People can go and buy Bitcoin themselves, yet you see billions of dollars having flowed into the ETFs and the funds because people prefer to do it in fiat in a way that they can see it on their portfolio next to the other things that they own in the public markets.
Yeah. And what I hear a lot is and it's a bit in line with what you say, and you see that around various initiatives in this space, that is the complexity to access those cryptocurrencies and understanding them. And I think your point is really about ease of access, and ease of access with people who have visibility and an understanding of where that industry is going, because we're going to see lots of developments. I'm sure we've already seen a lot of developments, and we're going to see much more. And we're probably going to see more currencies popping up in the foreseeable future. And how do you make sure that you're playing in the right ball and not moving in the wrong direction?
I mean, you look at something like Polkadot, and it's always for me about bridging the gap between the capital markets world and the sort of esoteric blockchain world. But you look at Polkadot, which has this massive potential here for growth. As a public company, we might be the only public company, I think, in the world that can give people exposure to the growth in Polkadot. I don't know of anybody else. And so that's an advantage, again, back to that question, which is, if you are sort of a person that wants exposure, but doesn't want the burden of figuring out how to do that and how to buy it, where to buy it, we're really a really great alternative.
Yeah. So, moving to a bit of a different question, Andrew. So you talked about what your organization is doing, where it is today. So you announced you announced an additional investment. I think it was in Polkadot,
Yeah.
very recently. What is your longer term plans? Like, what is the strategy going forward beyond what you have today?
Yeah, and so I think the strategy is the same. It's sort of, I would say, our mission statement is to bring things that are exciting in the blockchain world and make them accessible to people in the public capital markets world. And so we're seeing a tremendous amount of exciting things happening in the non-fungible token side. And we're having conversations there with various groups to see how we might get involved with that and bring that to our investor base. But there's all kinds of exciting things happening there. When I look at DeFi, the decentralized finance space, we were talking about your platform and trading and how I think in 3 or 4 years, the capability for people to trade digitally and have settlement within, 10 minutes instead of 2 days and be able to trade beyond 9:30 to 4 o'clock, I think that's inevitable. It's coming. And, the NEO is going to evolve and everybody else is going to have to evolve as well. So when I look into the future about tokens.com, we want to be the infrastructure, the underpinnings to what's happening in these areas and be able to bring that exposure to investors. And so I think as DeFi grows and the NFT area grows and other exciting things we're looking at grow, we're going to get exposure for our investors to those areas in ways that provide them with sort of, outsized returns based on what's happening in blockchain.
Yep. So, taking now the perspective of the investor, company has been public now for what is it, a month, a couple of months, maybe. I keep
A month.
I
April
lose.
30th. Our listing date was April 30th.
There you go. So it's a month, and I'm an investor. I believe in the DeFi story. I believe in the opportunity. Why should I invest in tokens.com today? Because I think we're talking about the opportunity. Is it too late for me? Is it too early? Should I wait a little bit longer? What is your view on that as an investor who believes in the vision, of course?
Yeah, look, I think there's I can give you many reasons why I think people should invest in us now. Number one, I think we're undervalued relative to some of our peers, especially when you look at the crypto miners. Again, we perform the same work as a crypto miner with additional upside, and I think we're trading at a discount to them. I think the management team comprised of myself and other people, backgrounds at Goldman Sachs, Fidelity, Galaxy Digital, bringing all of that expertise together. I've run a large public company before. This is smaller. I intend to grow this into a much larger company. I think if you are concerned about the energy use in cryptocurrency world, you should be supporting a company like tokens.com. And I think if you're excited about all the things happening, like I think, DeFi is going to be $1 trillion business. And right now, we are one of the best ways to get access to that. And different than what other people are doing. I hear what, other people are doing in DeFi, which is, Bitcoin lending protocols where you have counterparty risk. And yes, you have some exposure to Bitcoin. But what we're doing, what I think about in DeFi, the growth potential in DeFi to me, and I love Bitcoin and I own Bitcoin, but I think the growth potential of DeFi far exceeds the growth potential of Bitcoin today. And so that's just a small number of reasons. We're revenue positive. Q1, we had income of 2.7 million US. For a startup company, that's pretty good. I don't know of many other startup companies that, come out of the gate with positive net income. So I just think the future for us is bright, and where we can take this company, I'm really excited about it.
But that is a critical point that you make, and there's been lots of information out there, and I'm still wondering if sufficient investors realize that you are publicly listed for a month. You've been operating, you're a pretty young company. You are in the innovation economy. You are a growth company. You have a clear vision, of being part of that economy of tomorrow, and you're making money. I think that lots of people should really look at that and realize that this is a growth company, but it is already at this stage generating income. And I'm not sure that sufficient people realize that. It says a lot about the model, and it says a lot about the potential. One item I would like to come back to for a second, Andrew, is Bitcoin versus DeFi protocols. Could you tell us a little bit more about how you compare those to each other, the core differences? And I think for some people it's going to be very obvious, but again, I think for other people it may not be that obvious. And how you would separate it also from each other, because I think that in today's world there is a bit of everything that's cryptocurrency is cryptocurrency, and then when something happens with Bitcoin, because Musk talks, or because the authorities in China take a decision, it impacts everyone. But in fact, it's different. And do people realize that? And can you tell us a little bit more about what that difference is and why it is so different?
Yeah, so if I was to say where the blockchain, cryptocurrency, or crypto asset space is moving to, I think it's going to be to differentiate between different cryptos, because you're right. Right now, the rising tide lifts all boats, and it when it goes the other way, it sinks all boats. And we saw that in the last couple of weeks. We've seen a big retreat out of crypto, some recovery in the last couple of days. I love Bitcoin. Bitcoin is the digital gold. I think that in the long term, it's a great asset to hold to fight off inflation. And I think that there was a $9 trillion budget announced out of the US today from the Biden administration. So I see inflation as a fairly large risk for the economy. Economies all over the world right now, and these were all in response to COVID. Bitcoin is a great asset for that. And Bitcoin is sort of slow and clunky, and I'm sure I'll get some Bitcoin maximalists, sending me messages and being upset. But generally speaking, Bitcoin has its place. There's things like Lightning Network and things that are being developed on it, but generally speaking, it's a slower network. Ethereum, Polkadot, Binance Coin, Solana, all of these, Cardano, these are programmable blockchains. It is a programmable piece of software, almost like investing into the internet back in like 1998, 1999, when you weren't exactly sure what it was going to do. But I think people look at this and are blown away by the potential and saying, wow, there's so many things we can do here. It's a way that, I think the financial world is going to be revolutionized in the next few years. And, it's happening now. I think that's going to be what differentiates. And then you're going to have sort of the meme coins, like, the Dogecoin and things that people just like to trade for fun. There's going to be, some things that are, just like in the stock market, you're going to have good players, bad players. But generally speaking, I think where our thesis comes in is let's invest in the underpinnings of the digital currencies, the digital assets that are being used to build the new economy. And that to me
Yeah.
is a way where we are going to be safe. They will be more resilient. I think things like Ethereum and Polkadot will rebound faster in a decline than some other things that just might not be around in 5 years. Bitcoin has its place. It is the OG of cryptocurrencies, but there's all of these other exciting things happening, and I think eventually they will separate.
Yeah. Yeah, and I think that is definitely something that needs to happen more. I was reading an article recently about that same topic, that there is so many different cryptocurrencies out there, and they have a different purpose and a different function.
That's right.
And Bitcoin, you can look at it as a potential value store. You can have a lot of debate about that, but I think you got a vision that you shared about it. I think the DeFi currencies and protocols are there to enable the economy of tomorrow, and that economy is going to be there, whatever way you look at it, and we'll see what happens with Bitcoin if it can become the gold of tomorrow. But it means two very different purposes, and you cannot let what happens in one influence your views in the other one. But I do believe that still for many investors,
Yes.
it's one thing, and that dissociation needs to happen.
Yeah, it's a little bit like the stock market. Like sometimes, like last year in March, it didn't matter if you were running operating a good public company or a bad one or anything in the middle. Sometimes everything drops and corrects at the same time. And I think the cryptocurrency world, to make an analogy, is a little bit like the stock market. And when you have Elon Musk or China make comments that scare people, you're really just taking a lot of air out of the entire sector.
No, absolutely, and let's hope that awareness develops, and I think you're doing a lot of good work in achieving that, and let's make sure that more people spend time with that. One last question to close it. These 30 minutes went by pretty quickly, Andrew. It was a very interesting discussion and eye-opening about your business and what makes you unique and different, and how staking compares to proof of work. But I see this question coming in, and let's put it forward to you. Does tokens hold Bitcoin?
We do. So we view Bitcoin as the transaction currency in the digital world. So we keep about 10% of our asset base, call it, in Bitcoin. It does not earn revenue for us right now. We're looking into maybe placing it with some protocols where we can earn some interest, but really we have it as a reserve currency. So when we see a pullback in something like Polkadot, we can sell off some of our Bitcoin and deploy it there. There's a lot of new exciting cryptocurrencies that are coming out, and we want to have a little bit of, call it, reserve currency in Bitcoin that allows us to be opportunistic.
So that sounds like a well-defined strategy or portfolio diversification strategy that gives you both exposure and access to new opportunities. Andrew, I would like to thank you for this great conversation. As I said earlier, eye-opening around your organization, clarifying some key concepts, answering some good questions from the audience, and I can only but say one thing. I'm looking forward to your growth, and I'm very excited to see that it's growth that is already based today on a very solid foundation. So wishing you lots of success in the future, and looking forward to a next discussion. Thank you very much for your participation in this spotlight, and I'm sure we'll talk soon again. Take care.